Welcome back. You're still tuned in to Mid-Cap Radar. Supreme Petrochem, the stock is on our radar. It is higher due to the sequential recovery and strong volume growth that the company saw in FY24 and Q4. We have Rakesh Nayyar, the Executive Director of the company, joining us now to discuss the quarter gone by. Mr. Nayyar, good afternoon. Thank you so much for joining us. Well, Q4 has seen good volume growth coming in both export and domestic markets. Before I talk to you about that, in the presentation you have mentioned that styrene monomer prices, they've started increasing from March because of the issues that we are seeing in West Asia. I understand that's the raw material. What does that mean in terms of your margins? And do you think this will continue in terms of higher prices?
See, the raw material prices going up only leads to the addition to the top line. Like last year also, you see, our volumes have gone up by 17.5%, but our top line is static because the raw material prices were lower as compared to the previous year. So these prices going on eventually will get passed on to the customers. Our margins don't get affected. Yes, but if the prices become too high of the raw material and at the end the finished product, then there could be a dampening effect on the demand at a later stage.
Understood that, sir. So you're saying that price moves typically are passed on to the end customer, and
yes,
unless there is a sharp spike in prices, there isn't really too much of an impact as far as margins are concerned. Let's talk about volumes. You said that volumes have seen quite a bit of a sharp surge in the quarter gone by, and this is what we understand is largely led by export volumes. So is this sustainable, number one, in FY25, especially Q1? And are there any worries from the Red Sea issues that are currently being faced? Which sectors are the ones that are seeing higher demand from the export markets?
See, as far as the volumes are concerned, in this quarter, our exports are not that high because we were catering to the domestic sector. And generally, the months of the last quarter of the year is always good in the domestic market because of the appliances demand coming up when they are stocking it for the summer season. And the lean month is the third quarter, wherein our exports were higher. But overall in the year, our exports are up. And if we look at it, the annual increase in the exports is almost 82%. And going forward to the first quarter of the FY25, we see that we would be doing better than the quarter gone by.
Okay, so you're expecting better growth in export markets. Considering this and the demand that we are seeing right now, what kind of volumes are you looking at in FY25? In FY24, you did volumes of 3,25,000 tons per annum, which is highest that you've seen in 5 years. What is the number looking like? Will you continue that?
We would be crossing 350,000 tons.
You said 50, right?
Yeah, that's right.
Okay, all right.
Okay. We also want to understand about the mass ABS project. The first line of the project with almost 70,000 MTA capacity was likely commissioned in Q4 FY25. What is the initial capacity utilization? How do you expect to ramp it up over the course of FY25? And help us with numbers that it can contribute to the P&L over the course of FY25 and beyond.
See, it will add almost close to 900 to 1,000 crores to the top line. We'll have an asset turnover of around 2. And the margins would be better than our polystyrene business, which is there right now. So we expect that the operating margin should be better than 10% as for the current prices are concerned. And as far as the ramping of the capacity is concerned, it is true that it will be the first time that the mass ABS will be introduced into the Indian market. It will take us some time. It will be maybe by the FY26, some quantities will get sold, some part of the capacity utilization will happen. But by FY27, we expect that we would be doing 100% of the mass ABS.
Okay, by FY27, 100% capacity utilization. You are actually on a capex free, Mr. Nayyar. You also are enhancing compounds in master batches and EPS capacities to cater to additional demand. What is this additional demand that we are talking about? By when will you be able to commission that? Can you give us a sense around this particular expansion?
See, this capacity would be online again by the end of this financial year. And the demand is coming from the various sectors, from the piping, from the films, from the appliances sector. So this is to cater to that, and also from the EV battery side.
Okay.
Okay, sir. So, the other thing that we are noticing, in the past couple of quarters is that you're increasing the pie of value-added products as far as the revenue mix is concerned. Now, going forward, how do you see or how do you envisage the revenue mix to be like? And, you did give us a guidance as far as volumes are concerned. Could you also leave us with a guidance, as far as the FY25 revenue margins as well as bottom line is concerned?
See, margins, predicting margins are difficult because there are many variables as far as because of the global events happening. And I can only talk about the growth in the volumes, and our volume growth would happen of almost 8 to 10% in the coming year. And as far as the value-added products are concerned, we are in the range of, depending upon quarter to quarter, we are in the range of 35 to 40%. And once our mass ABS is online, and then we would be doing compounds of mass ABS, that would add further to our value-added products.
Okay, all right. Mr. Nayyar, thank you so much for joining us today and giving us all those
Thank you.
details. Considering the global macros, as you said, it's difficult to look at margins because we keep seeing spikes in every other commodity every other time. But thank you so much for joining us. We'll slip into a short break now. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned for that.